Welcome to Fear and Greed, the week ahead. This is where we take a look at the big events, reports and releases coming up this week that give insight into the economy and a look back at what happened last week too. I'm Sean Aylmer, and every Monday I'm joined for the week ahead by economist Stephen Koukoulas. You'll find him at thekook.com and on Twitter using the handle thekook. Stephen, good morning.
Good morning, Sean.
That was quite the week last week, wasn't it?
It was, and it wasn't just the Melbourne Cup where I might highlight I didn't back the winner. Very elegant, was a stunning result, but nonetheless, the other things that were way more important were central bank meetings, including our own Reserve Bank, who kept rates steady. Obviously, I don't think nobody expects them to move at all, but they did abandon the targeting for the 2024 bonds, which was widely expected given the previous week we'd seen the bond market sell off in reaction to the inflation numbers. So that was something. And Dr. Lowe, RBA governor, in his press conference, which happened after the meeting, I thought it was a fabulous press conference because he actually outlined a lot of the issues that they're mulling over. And while he still was sort of trying to discount what the markets are pricing in, and that is rate hikes starting in the middle of next year, he was open to the view that, hey, if we are wrong on our forecast, if the economy turns out to be better, inflation and wage pressures start lifting, well, we might be in a position to hike rates earlier than expected. But the other big news too, the US Federal Reserve kept rates steady, but they announced a tapering of their quantitative easing. That's their bond buying is going to be scaled back over the next few months. And again, that was broadly as expected, but again, Fed Chairperson Powell was sort of suggesting that the inflation spike that we're seeing is transitory or more transitory than permanent. So that's why they're happy to just take this gentle approach to withdrawing a lot of the stimulus. And over in the UK, our friends at the Bank of England surprised, well, it was really a 50-50 call, I guess, but they surprised a lot of the market by keeping rates on hold as well. So the big three central banks for us, Aussie, UK and in the US, all kept rates steady.
And I think the European Union Central Bank too also said that they were probably a bit more sanguine, is the word, about inflation than others thought.
Indeed, and there'd been a pricing of rate hikes at the end of 22 into the yield curve for the Eurozone. And okay, it was only 10 or 20 basis points by the end of 2022 that were priced in. Nonetheless, with the Eurozone economy still struggling, unemployment very, very high, inflation not quite as obvious as in the US and UK, Canada and Australia, they were sort of more suggesting that, hey, this is a really transitory issue. It's linked to the supply chain blockages that they're experiencing, particularly in their auto industry. The manufacturing sector there is being really caught up. So perhaps they had a slightly different take on it given the nature and the structure of their economy.
One thing I always find interesting about the central banks, and particularly the Reserve Bank of Australia, which is the one I know best, they are very, very data-driven. So Phil Lowe particularly, who has a PhD from MIT in the US and has always been a real data man, data matters to them, and so they don't go by feel. And so often a lot of this, their prognosis really is on facts rather than what they feel.
That's very perceptive, because I remember when Glenn Stevens was governor, and he was the previous governor prior to Lowe, but they used to act preemptively, was the word, that they would sort of anticipate, hey, inflation's probably picking up over the next 6 to 12 months, that we're seeing the early stages of a tightening in the labour market, so we're going to hike early. So in a sense, they were sort of going to head off inflation at the pass, so to speak. So they would be preemptive, whereas you're quite right. Dr. Lowe tends to rely on the hard data before he's, I'll call it being forced to act, but obviously if inflation does pick up or doesn't pick up, as was the case recently, he'll wait to see that before he reacts. So I think he made that clear again last week in his commentary too, that he needs to see inflation well entrenched in that 2 to 3 band, preferably the upper half of that band. He needs to see wages picking up to 3% plus, was exactly what he was saying before he'll even consider hiking interest rates. That's his current strategy. Now, look, things can change, but as you point out, we will be looking at those data with more curiosity than we normally do when they start coming out in the early part of next year.
And just briefly, the other data out last week, the quarterly retail sales figures, the worst quarter ever, I think, on record.
Yes.
International trades come off and building approvals. I mean, what's going on in all those areas?
Weak numbers all around in a sense because, yes, the retail sales numbers, no surprise. It's the September quarter. Victoria, New South Wales, the ACT were all locked down. ACT had a 30% decline in retail spending. Wow, that's a big amount for us Canberrans.
That was you, Stephen, specifically.
I was stuck at home. I couldn't go out.
Right.
but nonetheless, it was down 4.5% for the quarter, and that's going to put a great big hole in the September quarter GDP. But again, we know that. We know it's whether it's -3 or -4, in a sense, doesn't matter. We know that's the COVID or sort of the Delta lockdown that was occurring. But we also saw building approvals coming off. That's the end of a lot of the government stimulus plans. And we also saw the international trade surplus, still $12 billion for the month. Wow. But it's down from about $15 billion a couple of months ago. Iron ore prices are falling. Some of the volumes of exports are starting just to taper off a little bit too. So, look, the trade position is still very strong, but I think over the coming months we'll probably see those trade surplus numbers starting to shrink a little.
Well, that's last week. We'll be back in a moment and get into the week ahead. I'm with economist Stephen Koukoulas, aka The Kook. So, Stephen, the labour force is the big one this week. What do you expect from it?
Yes, for the month of October, we did have the early signs of some of the reopening in New South Wales, which will probably spark some recovery in employment. Victoria was a little later in the month, and the way the Bureau of Statistics calculate the numbers, that they tend to do it in the first part of each calendar month. So we may not get that rebound in employment in Victoria coming through. But nonetheless, New South Wales, obviously a third of the Australian economy in terms of population in the labour market. We will probably see, something of the order of 50 to 75,000 jobs coming back, and that's after about 300,000 jobs were lost in the prior 2 months. So at the start of the rebound, more interesting will be the next few months. But look, this is a number that we're getting. Unemployment, again, quirky depending on that participation rate, but probably staying around about 4.75%, plus or minus the odd 0.1%. So an improvement in the labour market linked to the reopening, but we're not yet there where we're going to have the labour force numbers capturing the full reopening, which will probably be when we get the November and then the December employment numbers, particularly December, once we've got virtually all states pretty much back to normal and the employment rebound occurring then.
So we're not New Zealand, Stephen?
No, we're not. But we saw in New Zealand the unemployment rate dropping to a quite staggering 3.4% in the September quarter. And there's lessons there for us, for the Reserve Bank of Australia and the Australian economy as they manage this recovery. We've got to remember that pre-COVID, that New Zealand had an unemployment rate of 4%, the US was 3.5%, and we only got down to 5%. So we were still well above these other economies. So there's something there for the RBA and for the government when we look at our labour market and whether we can get a sub 4% unemployment rate as well.
And this week also we've got National Australia Bank business conditions and Westpac consumer sentiment, which we all like to keep an eye on.
We do. They're nice contemporary indicators of how consumers and businesses are feeling. With the lockdowns ending, both of these surveys will capture how business and consumer were feeling about the fact that borders are reopening, shops are opening, the hospitality sector is coming back, tourism is starting to come back, at least domestically in particular, a little bit of international. So I'd be expecting to see nice big increases in consumer and business conditions when we see those numbers later this week.
Have a great week, Stephen.
Thank you, Sean.
That was economist Stephen Koukoulas, better known as The Kook. You can find him at thekook.com and follow him on Twitter using the handle The Kook. I'm Sean Aylmer, and this is Fear and Greed, the week ahead.